Hello friends, today's topic 10 less risky stocks for investment. There are two major categories of investors in Indian stock markets. Number one, FIIs, meaning foreign institutional investors. Second one, DIIs, that means Indian mutual funds, Indian insurance companies, Indian pension funds, and other institutions, and they are collectively called as domestic institutional investors. Statistics of Indian markets have shown that FIIs just enter and exit out of the stocks quite frequently, but DIIs usually are more permanent and long-term shareholders since they don't have any compulsions to withdraw and take away money to another country. A few months ago, we had made a video on ಹಣ ಹೂಡಲು ಅತಿ ಕಡಿಮೆ ರಿಸ್ಕ್ 11 ಷೇರುಗಳು. Watch the video. If not watched, video link in the description box below. And this is the thumbnail. ಹಣ ಹೂಡಲು ಅತಿ ಕಡಿಮೆ ರಿಸ್ಕ್ 11 ಷೇರುಗಳು. That video covered the least risky stocks in Nifty 50 index. In this video, we are covering the stocks in the top 100 in India based on market cap, which are not in Nifty 50 index but are the highest domestic institutional investors holding and high historical returns. Here is the list with the good returns. Number one, Bharat Electronics. DII is holding 25.04% and returns in the last 10 years 24%. PI Industries, DII is holding 24.24% and returns in the last 10 years 38%. Number 3, Cholamandalam Investment, 21.24% is held by DIIs and returns in the last 10 years 29. Emphasis, 19.54% is what DIIs are holding. Returns in the last 10 years 19%. Number 5, Info Edge, DII is holding 16.81% and returns in the last 10 years 26%. Apollo Hospitals, DII is holding 16.56%, returns in the last 10 years 18%. SRF 14.85%, DII holding and 50% returns in the last 10 years. Shree Cement, DII is holding 11.79% and returns in the last 10 years 19%. And Havels India, DII is holding 10.40%, returns in the last 10 years 25%. Marico, DII is holding 9.78%, returns in the last 10 years 17%. If you are a beginner in stock markets or have less experience, then you should stick to Nifty 50 stocks until you get very comfortable with the stock markets. The stocks discussed in this video is for more experienced investors who are looking for starting point to do more research and add one or two stocks in their long-term portfolio. For the last few weeks, we have been getting a lot of inquiries in the chat box and email whether it is worth buying the shares now. ಈಗ ಷೇರುಗಳನ್ನು ಕೊಂಡರೆ ಜಾಸ್ತಿ ಲಾಭ ಪಡೆಯಬಹುದು. So we are covering that particular aspect in our free introductory webinar along with the details of our 3 months online stock market course in Kannada. And the free introductory webinar is organized on 26 February, Sunday from 4 p.m. to 6:30 p.m. And this webinar can be watched in mobile as well as in the laptop. To register for this webinar, you need to do a little work, and that is send an email to successdigest@gmail.com with your name and mobile number, and the subject in the email has to be Kannada webinar. If you want to earn minimum 1 crore for retirement and your children's education and marriage has to be 100% free, then you should attend Dr. Bharath Chandra's course. And after taking this webinar, if you find it worth attending, then you can continue with the process of joining. Now, coming to the matter of the video. We have excluded many stocks because of poor long-term returns or if they did not have a history of 10 years in the stock markets. That means this is a very selected list. Finally, at the end of the video, here is a question. Out of these 10 stocks, do you have any stock in your portfolio? Type the names of the stocks in the comment section. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, send this video to all your friends. At the end, thank you for watching. Bye bye. All the best.